When investors come into Paris, they just won't probably buy prime asset in Paris. So I think it depends of the specialty of the fund, but they are looking for a hotel, retail, or office. So I think that the trend and the market for Paris is just because they want to buy long-term secured asset for prime asset. So so it's more for prime. It's the reason also the tax is not, if the tax rate is not so very important for this kind of investor, because they are not opportunistic. So if you are opportunistic, effectively you can be challenged by the taxes or the potential future taxes. But if you're a prime long-term investor, I think there is no major difference, because they buy a place, and they buy a place where the volume is 53 million square meters. So they buy for the long term.
Great. Francois, can we just focus on kind of industrial logistics from your side, which is obviously your specialist area? What do you see as the trends there? Are there opportunities there, risks? How are you seeing the market sort of for the coming 6 to 12 months?
First of all, I think the occupier market is quite healthy in France, which makes this sector quite attractive. It's very stable, very resilient. There's even some market in Paris, and also in some regional cities where we may see some rental growth by year-end, beginning of next year. So it's going to be small rental growth, but still, which is a good sign that the market is actually doing well. On the investment market, clearly there's flight for quality. I mean, there are many buyers that are looking for prime markets. It's difficult to buy a warehouse in Paris, although there are some, but not for sale apparently. But if they were for sale, clearly they would be bought. But there's clearly a flight for quality, prime assets, good covenant. I think lease term has always been an issue for a non-French investor, in the sense that there's a 369 lease structure in France, and clearly a German would look at the French market with a long lease term. He wouldn't buy a short lease term. In the industrial real estate market, it's very different, because if you're in a prime market, I mean, a 369 is actually almost a 9-year lease. You're just changing sometimes tenants, but at the end of the day, your real estate is actually occupied. So that makes this market a bit difficult, and I guess it's way different from what you guys are experiencing here in the UK. Obviously, it's more 15 to 20 years lease term. But at the end of the day, what I'm trying to say is that prime market, prime assets with a short lease term is actually liquid right now. The only issue is certainly the lending side, who's a little bit
challenging.
Yeah, I was going to say. So that's one trend. The second trend is we're also seeing some actors being interested in secondary locations, but not for one or two assets. Perhaps the private investors, local private investors, obviously will buy small one asset here and there in secondary locations. But I think there are international investors looking at large piece of real estate, industrial real estate in France, outside of the Paris Lyon corridor, which is the main one, and that's certainly a new trend. Obviously, there's an opportunistic play here, but some also are trying to buy or build a platform. So we'll see in the next month what's going on exactly. But I'm sure we're going to hear more from these guys shortly.
Great.